This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
We are back with another show here on the Made for More Living podcast, and today we have a special guest named JJ Mack with American Pacific Mortgage. Good morning, JJ.
Good morning.
Or hello, whatever time it is. But what we're going to talk about right now is this new product, this new loan product, and been doing some research on it. I'm sure you have a lot to say, and it's quite honestly terrifying to me. Like, I was doing some research, and this is like reminiscent of like 2006, 7, 8, like almost like stated income type loans where people are going to be able to qualify for this product. It sounds great, like a balloon, like a reverse mortgage. It sounds great until it isn't. And we are talking about, it's UWM, right?
Yes.
United Wholesale Mortgage is coming out with a 0% conventional loan.
Correct.
Can you share a little bit about what that is all about?
Yeah, absolutely. Super excited to be here. Thanks for having me, John. Appreciate it. So I'm JJ Mack, work with American Pacific Mortgage, and this product, UWM, have just released. It sounds really good. I was actually really excited for it, and I couldn't wait to sell it. But then I read the fine print and realized that it wasn't as cool as I thought it would be. The reason why, the big reason, is because they will not let you refinance unless you pay off a second mortgage that they're going to slap on there that's for 3% of that mortgage cost.
So basically they're giving you 3%, it's a second, and that's how you're getting away with, like, instead of it being a 3% down conventional, they're giving you that 3%.
Well, it is a loan.
Yeah.
It is a loan. So
it's a loan, yeah.
So
they're giving you that 3% up front, but in order to refinance, you'd have to pay that 3% back.
Correct.
So let's say your mortgage is and the whole reason why you're getting it in the first place is because you don't have the 3%.
Yeah, so it's a great product for if you were able to refinance, but the problem is that interest rates are high right now.
Yeah.
So if you can qualify for it, great. The problem is that if interest rates go down, you're stuck.
Yeah, because you didn't have the money in the first place. What's going to change between now and next year and the year after?
Right. Exactly. And so
Interesting.
It put you in a bad situation where now you're going to have to pay it off first. Maybe you're going to have to borrow some money or do something that you don't want to do. And now you're in this position where you can't get out of it.
Crazy that they're even doing this.
Yeah, and so there's a lot of other programs out there that are better, that have that same functionality.
Yeah.
There's one that's called a CalHAFA loan that I really like.
Why's that?
Well, because it allows you to refinance it. So
okay.
It gives you that second mortgage.
Without paying it off, though.
Without paying it off.
Okay.
Yes. It's called a resubordination.
Yeah. So if you got a loan for $400,000, or if the purchase price is $400,000, you need 3% down. With the UWM product, that's $12,000. $500,000, it's $15,000. $600,000, it's $18,000. Not a lot of people have that extra cash just sitting around to pay that off in order to do the refinance.
Correct.
And so let's say, compare that to the CalHAFA. Now, you don't have to pay that off. It's just sitting there. It's like a silent second.
Yeah, it's a silent second. Just like the UWM product, you don't have to make a payment on it.
Okay.
However, once you do get that interest rate bump lower, now all of a sudden you have the chance to refinance, and they will resubordinate. And I can kind of share what resubordinate means.
Please, yeah.
Basically, when you go and want to refinance, that second mortgage is going to take a first lien position. If that the initial first lien, which is the loan, the bigger loan, takes place first. So when you pay that off and you refinance, basically what you're doing is you're paying off that first mortgage.
Okay.
When you pay it off, you put a new mortgage in there with it. So now you've paid off the old one and you got the new one. But that second lien now jumps to the first lien. And so because it jumps to the first, banks don't want that. They want to be the first lien.
Yep.
Does that make sense?
It does.
Explain that okay?
Yeah. So basically, UWM's 0% conventional, 0% down conventional loan sounds maybe better than it is, but the good news is there's a product that does the same exact thing, but better.
Correct.
And how do the interest rates compare between this? Like, why would even UWM come out with this? I don't understand the benefit.
Yeah, because it's something that they have. It's something that they only offer. So they're presenting it as their own thing. And so nobody else can do it. Nobody else has had this product out. However, they're just, the way that they're presenting it, it's all marketing. And so The CalHAFA loan, however, has been out. It's a good program. It's a California tax-based loan, so we're paying for it being California. Some of our taxes are going to this program.
Okay.
And so that's why it's being looked at, in a different light.
So basically, this is just a shiny object, something that the lenders are able to dangle, the real estate agents are able to dangle, but it's not the best product for clients.
I definitely wouldn't recommend it. I would look to CalHAFA loan first.
Okay. Are there different credit score requirements or anything like that? Like, I'm just trying to compare, like, why somebody would even want to do this.
Yeah, I mean, not really. It's all pretty standard. Actually, CalHAFA loan opens up a little bit more options than your UWM 0% down product. And the reason why is because there's actually some benefits to the CalHAFA loan that this one doesn't have, based off of higher debt-to-income ratios, some different, and it's basically the same credit score requirements.
Okay.
But the UWM loan is income restricted. And so the CalHAFA loan is income restricted as well, but it's a lot higher income. So people are making well over $100,000 can still qualify for the CalHAFA loan, where the UWM loan is only the median area, 80% of the median area income limit.
So basically what I'm getting out of this conversation is this is just a bait and switch. UWM is probably going to say, hey, we got the 0% down, come talk to me. And then they're going to pump you into a CalHAFA. Yeah,
but if a good thing is if you do get, marketed this product, just be careful with it. I don't want you to get out there and find something and then realize a year from now that you can't refinance and you're stuck. That would be the worst thing ever.
That would be. Totally get it. But then if somebody wants to reach out and learn more about JJ's CalHAFA program, just call or text 530-GET-MORE. That's 530-GET-MORE, and we'll get you connected with him right away. In addition to connecting you and learning about that 0% down, if you're a first-time home buyer, 0% down CalHAFA program, you also have this great tool, this great calculator. Like, I was just talking with somebody, where were they? West Sacramento. Yesterday in West Sacramento, and they were so frustrated because they've been hopping online. They're trying to figure out, they're going to move to Colorado, and they're trying to figure out what they can qualify for. And they're using these online generic calculators on the big real estate websites. And they're like, this just doesn't make any sense. It seems unrealistic. And the numbers don't add up. So if you're doing the same thing, JJ also has one of those, right? But it's more accurate.
Yeah, absolutely. So we've spent a lot of time and research putting into this program because we felt the same exact way. A lot of our clients were coming to us and saying, hey, Zillow told me this payment was only going to be $2,000 a month. In reality, it was $3,000 a month. Or, Redfin, or I just went on Google and typed in mortgage calculator and this thing came up.
Yep.
So we spent a lot of time making this so it was perfected. So you knew exactly, well, not exactly, but very close to what your payment was going to be.
Yeah, so if you'd like access to that calculator, just text us or call us at 530-GET-MORE. We'll send it over. There's no cost. There's no charge. We're not a high-pressure company. We just want to get the right information in your hands. But speaking about loans, and because that's what you do for a living, you're one of the best in the country at it. You have this great program called the Star Loan Program. Can you elaborate a little bit more about what this does? Yeah,
so we really want to take a stance on, serving the people in the communities that are, healthcare providers. So nurses and firefighters and police officers and people that really serve us in our surrounding areas.
Do realtors qualify for the Star program?
We're working on that.
Okay, thanks. Let me know.
Yeah, and so basically, and we are adding to it. Maybe not realtors, but we are adding to it. And so basically what we try and do is help those out that are helping us. And so we've taken this program and eliminated most of the lender fees and dropping the interest rate for those people.
That's awesome.
It's very cool.
And so what are the qualifications? So firefighter, nurse, lender, firefighter.
I wish.
Are they first responders in there as well, like paramedics and all that, nurses?
Mm-hmm.
Okay, cool. And so if you want to learn more about that, again, just call or text 530-GET-MORE, and we'll get you right over to JJ, and he can get you hooked up with that program. So that way, not only are you saving on fees, but you're also getting a lower interest rate.
No doubt.
Awesome. And so speaking about, military and like first responders and all that, there's been a lot of discussion about the VA loan program and how, because let's take us back in history, JJ. Prior to this whole stuff going down with the NAR lawsuit and how commissions can be paid and who can pay what, How has the VA loan program operated for a long, long time?
Yeah, so the VA loan program, what their goal is to help the veteran out. Mm-hmm. That's their main goal, to make sure that they're getting the best possible transaction that's out there. And so they've done that, and they've done a really good job at it. They have less fees, their interest rates are a lot lower, and they make the seller pay for certain items.
Yep.
And so that's really helped the buyer out in the past.
Yeah, the buyer being the VA the veteran.
Correct.
Yeah.
And so that's really what the VA has tried to do. They've taken these fees, they've taken these costs, and a lot of them they've moved over to the seller side, which in turn, allows the buyer to get a much better transaction, a much better deal.
Yep.
But like you said, this NAR lawsuit has come up, and I mean you can talk a lot more about that than me in terms of what it is and what it's doing.
Sure.
But the VA was the last place to get on board with allowing for the buyer to pay real estate commissions.
So they had lumped in real estate commissions as being part of closing costs and fees that traditionally would not be allowed to be paid for by the buyer.
Correct.
And so now they've reversed that. Is that temporary, or are we taking this like a month at a time, or what's that look like?
So at this point, there's no temporary. They've come out and they've said this is the way it is.
Okay.
So this is, it's not an official ruling yet, but they're saying at this point, this is what they're going to go and do.
Okay.
They can change at any time, but right now they're saying realtors can get paid by the buyers.
So right now, as of this recording, that's allowed, or is this going to go into effect at a later date?
It'll go into effect on July, whenever the
August 17th.
August 17th.
Okay,
correct.
Cool. Good to know. All right. And then if you'd like to learn more, if you want to get a hold of JJ and his team, just call or text 530-GET-MORE. That's 530-GET-MORE, and we'll connect you right away. Thanks for being on the show, JJ. When we come back, we're going to talk about cash buys, which is your special loan product that allows people to purchase a home with cash before selling their current home. Back after this.
Mike, it is the biggest transaction of your life, selling your home.
Oh, yeah.
And so people expect more when it comes to that experience. That's why they work with Johnny Jennings and the Tom Daves team with Made for More Realty. For instance, Dave and Melissa, they were retiring, moving out of state, but they needed to sell their home for the most money possible because it was part of their retirement plan. So they worked with Johnny Jennings and the Tom Daves team, able to sell the home for $40,000 over list price in under a week. Can you believe that?
Expect more, get more with Johnny Jennings and the Tom Daves team at Made for More Realty, brokered by eXp Realty. And get more for your home.